please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good time to bring in our Alpha Manager of the day, Rajeev Thakkar, who is the Chief Investment Officer and Director at PPFAS Mutual Fund, is now joining in. Rajeev, good to have you on the show. So, interesting times. I was taking a look at your August fact sheet where you had mentioned that you were anyway raising cash levels slightly. You had, I think, 26% in cash and arbitrage. And you'd said at that time that the market valuations are a little steep and you're trying to find bargains and you're waiting to deploy. Well, you've got what you wanted. So what are the thoughts now? What would you buy?
Well, I've been something like a broken clock. So this is not just in August fact sheet. This has been the case for almost 12 months. Now, the fall seems to be very, very large, and I can understand the pain that is there in a lot of portfolios. But the large caps are down about 6.5%. So at least in the large cap space, it's not that everything has become incredibly cheap. The mid-cap indices are down maybe 18% and small cap of about 31%. So that seems very, very steep. But that has to be seen in the context that on the way up also they were equally fast in going up. So we are continuing to look at individual names, and if one-off there is an opportunity, we would surely buy. But again, it's not that the September sell-off has suddenly changed things dramatically, but surely given the change in sentiment, I am very, very optimistic that we will find opportunities to deploy funds.
Okay, Rajeev, hi, good afternoon. You added Sun Pharma to your core portfolio. Your thoughts on this pharma rally and also on this IT rally? Today we are seeing actually a bit of a cool off in IT.
Sure. In the last 3-4 years where the markets were rallying, the two sectors which had not really participated in the rally were IT and pharma. Partly it was to do with their industry conditions where demand conditions were not favorable, or in pharma there were pricing pressures, there were plant quality issues. The other factor that was there was that rupee was rock solid, and in fact on a real basis it was appreciating against the dollar. So it was always a contrarian bet, and these two sectors are having companies which are otherwise well governed but for some reason were not in market fancy. So we have been building these small positions in pharma rather than taking large weighted positions in one or two companies. We have been building a portfolio of well-run companies in pharma, and we have been invested for the mean reversion to happen in a way, which has happened in currency, and the easing of pricing pressure in the US markets and normalization on the quality front. Same goes with IT. I think a while back there was undue pessimism in the sector, wherein we had built a few investment positions.